So, how is everybody enjoying the event so far? Yeah. Just a show of hands, how many of you are in investing? How many are you investors? And how many of you are in financial inclusion? Yeah. So we are, the fintech journey in Hong Kong has really started to take off. And we had a couple of runs in the last couple of years. And this year, we're going to have a big fintech week. We see a lot of, you're going to stay tuned because the Hong Kong Monetary Authority is going to come up with a lot of interesting fintech initiatives. As of the fourth quarter, there are going to be a lot of announcements made on the whole area of fintech in regards to virtual banking and also payments systems, and et cetera, et cetera. So very exciting things coming up. And we are actually we're looking forward to doing a lot of cross-border solutions with other jurisdictions. So for example, we are working with the Singapore MES and also the Shenzhen authorities and the London fintech authorities, as well as those folks in Europe. So you're going to hear a lot of that, and I think this is going to be very exciting for us. And what we're seeing actually in terms of evolution regarding what's coming up here, we have 3 sandboxes here, and I wanted to encourage you to looking at that because the 3 regulators we have: the Hong Kong Monetary Authority, the Securities Futures Commission, and Insurance Authority, all have sandboxes here that are welcoming institutions and innovative entrepreneurs to come and work in the startups in the sandbox. And this is something which is very interesting. We're looking at, and not only in banking but also asset management and insurance. So, up next, we have an online platform that connects investors with small businesses that need funds, sharing how they're solving the issue of financial inclusion by making credit-worthy SMEs bankable. Can you please welcome to stage Funding Society's co-founder, Kelvin Teo. Kelvin.
Very good morning. I'm Calvin. I'm the co-founder of Funding Societies, or Modalku, and we are SME digital financing platform in Southeast Asia, licensed and backed by Sequoia and SoftBank in Series B. So I'll be doing 3 things today here. Number 1, just quickly introducing what we do. But given that this is a relatively familiar model with folks in China or across the world, I'll be sharing how has this model evolved in Southeast Asia and what are key learnings that we have seen. So in short, we are a online marketplace that connects small, medium businesses with individual and institutional investors. And what we really try to solve here is really 2 key problems. Number 1 is that, as you would know, large part of the world are facing a structural problem whereby small, medium businesses are kind of neglected by banks because this is not the most profitable of segment to serve. And if you look at the peer-to-peer lending model across the world, most companies focus on consumer financing. And for us, our goal is really to serve this structural gap that small, medium enterprises are facing, and it amounts to approximately $20 billion every single year within just Singapore itself. And currently, we are operating in Singapore, Indonesia, and Malaysia. And different from what many people think about small, medium businesses when they come to online or digital financing, many of them think about these companies as, hey, perhaps it's startups, perhaps it's close to bankruptcy, it's weak, and so on and so forth. But what we have seen and are currently serving is that we're actually serving companies as small and sole proprietors, all the way to small listed companies with a revenue of even $50 million. Because we are fundamentally serving not just a good-to-have product, but rather literally a financing gap that the banks are dropping behind. And from an investor's perspective, what we're really offering is an investment opportunity that's very different from others. Rarely do you see an investment product whereby you can get a monthly repayment return. And in Southeast Asia, you're gradually seeing this not as hey, double-digit, high-yield, high-risk products, but it's gradually evolving to the space of what you see in the UK, whereby we are giving out high single or mid-single-digit product as a form of diversification for not just individual investors, but also asset management house and institutional investors. So as shared, currently we are focusing on Southeast Asia. We are licensed in Singapore, Indonesia, and Malaysia, and we are currently the biggest platform in Southeast Asia. So compared to China, we are of course at a much smaller scale, but from a relative perspective, we are the biggest in the region. So currently, we have originated about 180 million Singapore dollars at a default rate of 1.3% across the board, with about 175 people currently. And given that this is a very new space in Southeast Asia, being a Series B company in this space makes us among the most mature platforms in Southeast Asia. So this is a chart that's very indicative of what is happening in the region. So a lot of players will be thinking that, hey, after China becomes mature, let's try it out US, but there's anti-competitive or political reasons. They try India. India is hard to enter, and companies start looking at Southeast Asia, hoping to emulate the same growth. But if you look at the report that's generated by Google and Temasek, a lot of the industry in Southeast Asia, because of the fundamental infrastructure that's available, is taking a much smaller growth path compared to many other regions around the world. So if you just look at peer-to-peer lending, the first platform that's in Singapore was in 2013, and that's about 7 years behind China. Similarly, from an e-commerce platform perspective, it's approximately 9 years behind. And the challenge is that because the region is still undergoing infrastructure development phase, even as we project forward by Google and Temasek, we are only expecting the whole internet economy to hit approximately 200 billion USD in 2025. So what's the implication for that? Implication for that is a lot of international companies, when they come to Southeast Asia, they hope to emulate the same growth in US and China, and they start pouring a bunch of money in terms of marketing, in terms of hiring people, and they start seeing that, hey, in a financing business, unlike an e-commerce business, that may not work out very well. So on the left-hand side, you see in Singapore, when a company tries to scale up overly fast, even in a country where the rule of law is relatively strong, you start seeing shams or scandals happening. And some may argue that, hey, if you can't solve it by rule of law, let's try to solve it by human beings. And on the right-hand side, you start seeing that to grow quickly, as a result of that, oftentimes you get defaults. And how these companies have tried to solve defaults is by hiring a bunch of debt collectors, be it calling the families of people who have stopped paying the money, which is a very common practice in China. But in Southeast Asia, this immediately became the front page of news, and there's a whole name and shame approach towards dealing with situations like this. And that is driven by two reasons. I think number one is that, yes, even with the best rule of law, Southeast Asia fundamentally still lack data in the SME financing space, which makes any big data approach not so useful because it's fundamentally small data. And even from a next perspective, because the infrastructure is weak, and that oftentimes you are forced to take the human approach, and that makes you susceptible to internal frauds, as well as other more regulatory constraints. So in Southeast Asia, because there's a benefit of seeing how this has evolved in other markets, they have actually taken a proactive approach towards regulating the space. So in China, or even to an extent India, they like you to start first and then get regulated later. Here, we have the experience that coming from ourselves, we were among the most abiding and proactive and compliant company. But upon coming up with a new regulation, on the right-hand side, we were asked to stop operating with immediate effect. With no warning whatsoever, stop right now. And that's because of the lesson that I've seen in the case of China, where the e-Zubao scandal has actually significantly impacted the regulatory perspective towards the space. That nowadays, if you don't have a license, you stop, or we will bring in the police to stop you. And similarly, even from the media perspective, the media are very happy to pick up such sensationalized news, whereby, hey, if the ministers will be openly talking about, hey, we should stop fintech because they are loan shark in legal form. So the media oftentimes may not even favor the fintech innovation, partly driven by bank lobbying. Hence, in our view, at the end of the day, if you are talking about SME financing or even consumer fintech in general in Southeast Asia, it is a long game that we need to play here. So some companies with strong capital even though we may have raised more money than any other platforms in Southeast Asia, we have realized that capital is a necessary but insufficient condition, fundamentally because of two reasons. On the bottom side, the fundamental infrastructure will need to take time to develop, be it from a data, from internet, or even just awareness side. You speak to a lot of people, don't need to talk about, you don't even have to ask them about peer-to-peer lending. You just say, do you know what fintech is? And majority of the folks may not even know what financial technology is. And from an individual space, you start seeing regulators taking a proactive approach towards curbing interest rates, curbing tenure, curbing size, because of the lessons that I've seen in other markets. And on the business financing side, you start seeing banks taking a proactive approach to lobby against the space up to the level of the parliament. Hence our urge is that, or our belief is that, while SME financing or even Southeast Asia is a very promising space, and we do welcome foreign innovation, be it from US, China, or India, but we do hope that we will take a more localized perspective whereby we will have to respect the rule of law as well as to co-develop the infrastructure so as to encourage the overall growth of the industry. So in short, we are funding societies, or in the case of Indonesia, we are called Modalku for localization. We are sincerely passionate about the space. So for any folks who are interested in Southeast Asia, we are hiring. And for investors who are looking, or even companies who are looking to enter into Southeast Asia, we're happy to partner. Thanks a lot.